Hello everyone, this is Gracie here. In this video, we will be discussing about government grants, which is IAS 20. So, what is government grants? So, your government grants, it means like we are receiving something from the government, a grant which is given by the government. So it is like no government this gives grant for without any reason. There should be a reason when government gives a grants, isn't it? It should be beneficial both for the government as well as for the enterprise. Only when there is benefit from the enterprise to the government grants would be issued. So it can be a past benefit or a future benefit which will be generating. So let us get into the meaning of what is government grants. Assistance by government in the form of transfer of resources to an entity in return for past or future compliance with certain conditions relating to the operating activities. So as I explained, there is some future or because of the past benefit what an entity has rendered to the government or to the public would be recognized by the government, and they provide grants for any project which is taken over by them. For example, a basic example what can I give is if an entity is engaged in construction of public toilets, so they engage in constructing public toilets, so government will provide grants in constructing it because they are almost engaged in producing, like they are what social activity, so social activity which social responsible activity what they are considering here. So where they need to render a certain percentage of their profit to the public benefit. So when they're doing it, they start engaging in building public toilets. So when they are engaged into it, so it is not easy to just build one public. It is easy to build a public toilet in one particular place, but not all over the country or all over the state. So when they have decided, an entity is decided to do it, they decide to do in their particular location where their business is set up. But government may approach these entities by giving grants to them, stating we will help you, we can give you the raw materials which is required for constructing public toilets in every places. So start your work constructing, so we will provide you assistance or we will provide you grants to the construction of this public toilets in various places. So this is just an example where when will a government come and approach an entity to construct it, where it thinks that by providing grants to the entities, it will be beneficial to the government as well as to the public. So the government grants will be issued, or based on their performance, how well they are performing, so it is beneficial for the nation's development or GDP growth, then government grants will also be issued to the entity or organization. So this is the meaning of your government grants. So the next slide is what is scope of government grants. So here in IAS 20 applies to all government grants and other form of government assistance. However, it does not cover assistance that is provided in the form of benefits in determining taxable income. So what this line states is in IAS 20 it applies to all the government grants which is received from the government and assistance which is received from the government. Any asset which is received or any money which is received from government will be treated as government grants, or any assistance which is received from government will be taken under IAS 20. But this standard will not cover the treatment of government assistance that is provided for the benefit or in determining taxable income. So any grants like any assistance which is given for the which is related in the form of tax, any concession is given in the form of tax will not be considered as government grants. So taxable rates or concessions which is given for income tax will not be considered as any assistance which is given for related to income tax will not be considered as government grants. Next point, the benefit of a government loan at a below market rate of interest is treated as government grant. Yes, so if an industry is engaged government, how would it encourage an industry for producing more and more, or for constructing of or for engaging in social services? How they encourage them is by giving certain government grants or giving certain government assistance, so that the industries will get motivated that they are receiving funds from the government for the development of their business, as well as the public services would increase. So when they are engaged into this activity, government will identify that this activity would beneficial the society as well as the government's of the country's development. What they engage is they start giving interest for the loans which is taken by the entities, which gives them low interest rates to such entities which is engaged in such activities, so which is beneficial for the country as well as to the public, to the government. So when it is beneficial, like, or any activities which is beneficial for them, might be for the past activities what they've done, or the future which is going to come, for any such activities, they come forward by motivating these entities. So when they put hands together, so it will help in further development or get motivated. So such industries get motivated to do the task. So benefit of government loan at a below market rate of interest. So when they're giving loan at lesser rate of interest than the market rate, then such benefits what they get will also considered as government grants. Next is recognition and presentation of government grants. A government grant is recognized only when there is reasonable assurance that the entity will comply with any conditions attached to the grant, and the grant will be received. Yes. So government grant is given based on certain conditions. Will you satisfy this condition? Only then the grant will be given. For example, there is forgivable loans, which means that government or any banks which engage in giving forgivable loans, like they give loan to education. Educational loan can be considered as an example for this. So where government has engaged itself in providing loans, where they give educational loans, the loan is given, so the loan can be repaid when that particular person finish the education, and through his earning the loan can be settled. Only when that person starts earning after his studies, and only then the loan can be repaid. So it is for a purpose. When you finish the task, you can repay that loan. So until he finish studying, the loan will be the loan can be unpaid. So as soon as he is engaged in working, then when he is becomes an employee, then the loan can be repaid out of his salary what he gets. So that is a kind of forgivable loan. So the entity, so it is having a condition. So if I am giving you an assistance, that means you need to accomplish this task. So when such educational loan is given, so students get motivated that there is an assistance, then the literacy rate will start increasing. Then the illiterates keeps on reducing. Illiteracy rates keeps on reducing. So literacy rate keeps on increasing. So this is the reason. So for every grant which I give, there will be a reasonable assurance. So they comply to that conditions. Then the grant is recognized as income over a period necessary to match them with the related cost for which they are intended to compensate on a systematic basis. Next point states, non-monetary grants such as land or other resources are usually accounted for at fair value, although recording both the assets and the grant at a nominal value is also permitted. So the first point what it states, the grant is recognized as income over a period necessary to match them with the related cost. So the grant is provided so that they need to match it with or compensate, for which they are intended to compensate on a systematic basis. So that income should be stipulated or should be compensated for the expenses or for the cost which is incurred for that particular project in a systematic manner. So next is non-monetary grants such as land or other resources are usually accounted for at fair value. So for example, grants can be given in the form of in form of money as well as in the form of asset. So when it is given in the form of asset, you need to recognize the worth of that asset in your books of accounts. So that is what your government grants IAS 20 explains. So how are you going to treat this government grants in your books of accounts? So when the grant is given in the form of money, you need to record that income in such a way that it compensates your cost. So what is the expenses you're spending over it? So when it is given in the form of asset, you need to record it in a fair value, or you can record that asset in your nominal value, which is also known as cost value. Cost value is it is nothing but where you deduct cost minus depreciation is deducted. So you have permission to record it in your fair value as well as in your cost value. Next is your disclosure of government grants. So how are you going to, next is your disclosure of your government grants. How are you going to show your government grants in your statement? So accounting policies are adopted for grants, including method of statement of financial position presentation. So this IAS 20 government grants explains how are you going to show your government grants information in your financial statements and how it is going to affect your financial position. So the first point states nature and extent of the grants recognized in the financial statement. So you need to show till what extent is your grants affected your financial position. And in second point, an indication of other forms of government assistance from which the entity has directly benefit. So what are the other forms of government assistance what you are receiving and it is benefited your entity directly? So you need to show an indication of how your government grants or any other government assistance which is helped your entity and which has benefited your entity. You need to show it. Next, your third point, unfulfilled conditions and contingencies attaching to recognized grants. You should also show you receive grants so that you can accomplish a particular task. So if you are not able to accomplish that particular task as per for what the government grants is given, you need to also show that unfulfilled conditions and contingencies attaching to your government grants in your financial position. So these unfilled or government grants which cannot be shown in the form of figures or numerical values can be attached in your notes to accounts along with your financial statement, stating that what are the reasons for why your grants are not being unfilled, or what are the contingency situation which is led to for the unfulfillment of your purpose for which you have received the grants, and other assistance what you have received, and how is it affecting your financial statement will also can be explained in your notes to accounts, where it gives an explanation of your which cannot be explained numerically, can be explained in a theoretical form in your notes to accounts. It is a document which helps. It is a sheet along with a financial statement which helps what the performance or any attachment which is done to your financial statement from the previous year to the previous year to the present year. So everything can be explained theoretically in your notes to accounts. So this is the clearly government grants. So finally, I like to conclude that IAS 20 government grants is mainly standardized so that how a government grant should be treated in your financial statement. So thank you everyone.